Hello and welcome to this edition of the Mutual Fund Eye. My name is Vandita Shivle and I'm here to take up your queries. Well, I was busy in some awareness campaigns, coronavirus awareness campaigns. I was part of those campaigns and that's why I wasn't very consistent in, taking up your queries. A couple of queries just lined up. So I thought I'll take them one by one. But the most important thing at the moment I thought was providing that kind of awareness and being part of those campaigns. So I'll try to take up your query still. Let's take the first query now. That's coming from Anand Babu. He's from Bangalore. Okay, hello Mr. Anand. Hope you're doing well and hope you're safe at your home. Please stay at home for the 21-day period. We are going to help you as much as we could from our side with regards to your investments and not spread that kind of panic that coronavirus. It's okay, it's just a virus. We can deal with it if we do it the right way. It's just that mindset which is needed. Let's talk about him now and his query. So he is 33 years old and he has been investing in mutual funds for the last 2 years. He has spoken about his family members and his monthly expenditure, which is around 65,000 rupees. Let's talk about his time horizon now, which is around 15 years from now. He's ready to invest for that period. He's a moderate risk taker. The goal is wealth accumulation. So one thing which is very good about your portfolio is you're very clear that this is your time horizon and that's the goal you're looking at, and both of them are aligned to each other, because whenever someone talks about wealth accumulation, our suggestion is to stay invested for 15 to 20 years. Now when we say stay invested, what it basically means is come what may, you need to stay invested. I'll talk about this later. But let's talk about your portfolio now. So you have been investing 10,000 every month for the last 2 years in Axis Blue Chip Fund, 5,000 in Mirae Asset Large Cap Fund, 5,000 in Mirae Asset Emerging Blue Chip Fund, 5,000 in Axis Mid Cap, 5,000 again in Kotak Standard Multi Cap, and 5,000 in Hdfc Hybrid Equity. So that comes out to be 35,000 you are investing in mutual funds. You have two questions here. First, you want me to understand your portfolio and tell you whether it's the right way of investing or not. And the second part of your question is whether to shift mutual fund investments right now to savings account, in order to avoid losses. That's your second question. First things first, looking at your portfolio right now, see, you have told me that you're a moderate risk taker, but you have two large caps, which is Axis Blue Chip and Mirae Asset Large Cap Fund. You have a thematic category small cap fund, which is Mirae Asset Emerging Blue Chip Fund. So it's a small cap category fund. Then you have a mid cap category fund as well, which is Axis Mid Cap Fund. You are into a multi cap category already, Kotak Standard Multi Cap, and a hybrid aggressive fund you have also taken. Now, talking individually about these funds, they are very good. But when you say that you're a moderate risk taker, I would not advise you to be in so many small caps and mid caps. Plus, you're already in multi cap, which is across various, market caps. It takes care of large cap companies, mid cap companies, and small cap. Then why do you need an extra mid cap? So see, I understand this fund has been performing very well. It's a flagship fund, Mirae Asset Emerging Blue Chip Fund. So I think these are the emerging companies which could be the next large caps in the coming years. So you can stay invested in that, but Axis Mid Cap is not making much sense to me looking at your risk profile. You're a moderate risk taker. So I think you can move out of Axis Mid Cap instead of Axis Mid Cap. Now when I look at your asset allocation, you have investments in equity, you have certain part of your portfolio even in debt fund, which provides a cushion to your profile, which is Hdfc Hybrid Equity Fund. Now it's the third largest fund in its category. They are maintaining assets of 21,000 crore rupees worth assets. So they are maintaining that. It's a very, very good fund. And but it's an aggressive hybrid category, right? It's not a conservative category. Again, it's a hybrid category. So I think you can move out of Axis Midcap. You do not have allocation into gold as of now. Maybe you have physical gold, but electronically I don't see gold in your portfolio by what you have told me. So I would suggest you can opt for an Axis Gold ETF instead of Axis Midcap. This movement could be easily done. So you can talk to your advisor and try to move your Axis Midcap to Axis Gold ETF so that you can benefit from the movement in the gold prices here as well. And it's a very, very good fund as well. So I think rest of the funds you can stay invested in. So if I have to talk about how much will you accumulate, so you can with your current investment, if you're not planning to step it up, so if I assume that you are investing 35,000 every month for the next 15 years, you can accumulate around 63, you are investing around 63 lakh rupees. And how much wealth you can gain, if I say that overall, this can give you returns of 12% on a compounded annual growth rate basis, then you can expect, because of that 12% CAGR, you can accumulate around 1 crore 13 lakh 60,000 rupees, and the total, that could be your wealth gain, and the total wealth accumulation including the 63 lakhs and the wealth gain could be, the maturity value could be 1 crore 76 lakh 60,160 rupees. That much you can accumulate with your current investment after 15 years if your goal is wealth accumulation. But if you are stepping up, then definitely the maturity value will increase. Stepping up means that as and when you can give more money, you are adding more SIPs in your mutual fund. So moving on to your second question, where you're asking me whether to shift MF investments to savings account in order to avoid losses, yes or no. The answer is complete no. You should not be shifting right now. Why? Because the time you stay invested, the more time you stay invested in market will bring more money than timing the markets right now. See, I know that these are tough times and people are really scared because they're making losses. Obviously, because the entire economy is crashing. Say global, say Indian economy, everything is crashing. But are we supposed to get into that panic mode, and do you think we won't recover? Then let me tell you, we will recover from here. This is not permanent. Nothing is permanent in this world. We have seen from our historical experiences, whenever such an epidemic comes in place, be it India, be it worldwide, there would be a solution to it. Every problem comes with a solution. So be rest assured, I don't think you should move out of your investments. Stay invested. Let power of compounding play its role here, because that is how you can gain wealth. If you take out money now, you will gain nothing, let me tell you. So it's better to hold on and wait. And if you're saying that you want to put it in your savings account, that we know what has happened with the rate cuts right now. It's a very good move that the government, our governor, Mr. Shaktikanta Das, he has come up with a new regulation. He has come up with a new rate cut, where the rate cut is, I think they've cut, the repo rate is now 4.4%. There's a 75 bips cut on that part. Even the reverse repo rate, that's down to 90 bips now. And so these are the things that are happening. So I don't think FDs are very attractive right now. The fixed deposits investors would be the people who are not very happy right now, because the interest rates are directly linked to the repo rate. So when the repo rate is down, it does affect the people. It is very useful for people who are going for loans, who have currently some loans, because that move is there. That move comes from the governor or by the central bank in order to boost the consumption. They want people to spend, so they come up with such moves, right? So I don't think that right now moving away from MF investments to FDs or to savings account, as you said, would be a great thing to avoid loss. You can gain from your mutual fund investments. I've also I have a lot of investments in mutual funds, and what I feel is that I'm not coming out. In fact, I'm doing my regular SIP investments as well, because I am a firm believer that markets will recover. And yes, everything takes time. I know that they're at multi-year low, but if you look at the 12-year trailing price to earnings to price to book ratio, that multiple year lows, but these are attractive valuations and a very good time to invest. So here, if you invest with little money, you can actually end up buying more units. So you need to understand this concept, and in fact, I would urge, if you have extra money, you can invest some more. So that's how your investment idea should be, and that's how you should be investing right now. Do not get scared, because it always happens. And it's not just COVID-19 thing, it's also the oil prices, the correction in oil prices, and a lot of things that's going on in the market, that the entire economy is getting impacted. So you do not have to worry. If you have to believe me on this part, then I would say please stay invested in your mutual fund investments, and you can really gain out of it. I don't think it's gonna hamper anything right now. So all the very best with your investments, Anand Babu, and I hope what I've explained is clear to you. Let's move on to the second query that's coming from Ujjwal Kumar. And he has two questions again. So first question is, he wants to do lump sum investment in Axis Blue Chip Fund. He has around 1 lakh rupees in his account, and he needs to, he has a surplus of this amount, and he wants to invest in this particular fund. So he's asking whether I should go for it or not with a 3-year plus horizon. Okay. And his second question is, which is the best Nifty index fund right now? Okay, sure. So a couple of things here, Ujjwal. It's a good thing that you are not in panic and you are still thinking of investment, which is a very, very matured way to behave. That's how an investor should behave in such a scenario, and not get into panic that I want to remove all my money. No, that's a very matured way of behaving, and hats off to you for that, Ujjwal. Very good. You want to do lump sum investment in Axis Blue Chip Fund, which is completely fine. It's a very, very good fund. But I don't think lump sum investment in a particular fund right now would be the right way. You should invest in calibrated and staggered manner. I know what's in your mind, that if I invest more, I can get more units. But see, looking at the economic scenario right now, you should have some liquidity in your hands as well. So I don't think you should invest completely in a fund which is locked for 3 years, when you're looking for parking your money for a long time. These are not short-term investments, and I don't tell people that you just put in money, let your money grow for 1 month and then you can put it out. That's not how large cap funds work. That's how liquid funds work, but not large cap funds. And if you're looking from that mindset, please do not do that. So I think going with a staggered approach would be a better way, because you'll have some more cash in your hand. And if you want to park some money for some time, it could be FDs, like say 6 months. Obviously, rate of interests are not very attractive right now, and especially after the rate cuts announcement. It's in fact an accommodative stance. So we can expect some more changes on that front in order to boost demand right now. So government will do anything and everything to make sure that the demand is in place, because there's absolutely not much demand, and that's affecting most of the sectors. If you look at the Nifty index, everything is in red. Right now, of course, after the announcement, we saw that there was less sell-off and there was more buying, but there has been a massive sell-off already in the markets. So we need to be very, very vigilant on that part, and we need to look at both ends and make our decision. So I would say calibrated and staggered approach. Say 25,000 every month, or 50,000 if you still want to go for. And also, if you want to park your money in absolutely safe environment, because right now people don't want to fall into any kind of credit risk thing. They don't want to go with any kind of thing where there is even 1% of there's not assurance. So if you want to look for that, if your father wants to look for that, anyone, then you can invest in debt mutual funds. Right now, after the rate cut announcement and so, I think short duration funds and corporate bond funds would be a right approach to go for, because we are seeing that the spread in corporate bonds will will be more. So I think you can go for that. Apart from that, there are other things that you could invest in. You have Kisan Vikas Patra, you have post office term deposit, where you could expect returns of around 7% after staying invested for 1 year. So those are the things you could do. You have national savings certificates, small savings schemes. So these are the things where you can invest in. Even any kind of fixed term, people who have been investing in fixed deposits and they're not very happy right now, as in, if you look at the rate cut, after the rate cut, they're not attractive at all, even for senior citizens. So you can look for all these kind of things. Especially senior citizen savings scheme is a very great thing for any senior citizen to stay invested in. But you are not a senior citizen, so I'm recommending you other things. And if you're ready to take some risk, then I think large cap fund is great to be in, but be very cautious that it should be in a calibrated and staggered manner. I don't want you to put lump sum amount in anything right now, because we are still not sure. We do not have a vaccine in place. There are certain certain things which are not clear still. So, and we are in a lockdown period, so I don't want you to just give away whatever you have as savings, if that's the case. Okay. Moving on to your second question, what is the best Nifty index fund? The index funds are great means to be in. As I always say, the expense ratio is low. It's a great way to invest. The best index fund, I would say ICICI Prudential Nifty index fund or UTI Nifty index fund. These two are really good. You could stay invested in one of them. I mean, you could choose one of them. And always look for tracking error when you are looking at any index fund. See, lower the tracking error, better the fund, right? Always remember this, this thing in your mind, Ujjwal, and you can definitely invest. I am sure that your query was well answered. There's so many things in mind of an investor right now, and as a human being also, we are not very sure how things would move forward. But all I would say is, if you are at peace, if you are happy, I know this 21-day lockdown period is not a very great time to be, people do get frustrated at times when they see that there's nothing. But this is a time when you can use your time the best way. You can study if you are really interested in finance, and you are interested in investments. You need to analyze each and everything. So I would say, in fact, if you have mutual fund investments, take, one day, each day you take one SID, scheme information document, go through it and look at your goals, look at your risk appetite, and try to see whether you did it the right way or not. And maybe you can tell me, if you want, whether you did it the right way or not. But just do not get into that panic mode. There's good things and what are happening, and I think we can fight this together. It's just that stay invested, stay calm. Your money is not going anywhere, trust me. And I know a lot of people say this trust me word is very scary, but right now you need to trust me. That do not get into that panic mode. Your investments are safe. Government is doing everything possible to make it better for you. So let's support the government in this lockdown period, and whatever questions you have, you can write back to me. Any kind of questions, market related questions as well. So all the very best with your queries, and I'll take up queries. You have so many queries lined up. I'll take it one by one in the coming days, so don't worry. Thank you so much for listening to me. Do not forget to subscribe my channel. Bye bye.